All right, so how do we trade this strategy? So I logged into one of my accounts here. I'm not going to do a live trade now. I'll do this in the next lecture. But what is the idea here? So if I'm looking at something like Key, now I don't know if Key is going to be the best one for you to start with, or maybe something that's a little bit less volatile. But Key looks pretty good. Now, and at this time, it might change when you're looking at this video. Maybe by that time, the price of Key is way higher and it's way more volatile. So obviously you would have to rescreen the coins when you're taking this course to find the coins that are good at that time. Okay, it's a very important point. Now, if I'm looking at Key right now, I want to make sure that the chart is ranging here. And yeah, it is. Now, I wouldn't want to buy here because that's a bit too high. I want to buy somewhere here. Okay, so at 14 seems to be a good price to buy. And the bid is at 14, so that's great. So I would place an order here. And I can place an order for, I don't know, let's say 100 or a million Satoshis, a million coins, which is going to be 0.14 Bitcoins. But obviously you want to start with the smallest amount. So let's say 100,000 or way less than that. I don't know what is the smallest increment is $10 that you can trade with. So if you're testing the strategy, start with the smallest increment. Start with $10 so you know if you're making money or not. Like with any other strategy, you want to test it out with the smallest increment because you have to be willing to lose all of that money because you're testing out a strategy. You're not sure if you're doing it well or not. You're practicing basically. So you don't want to practice with any real money. You want to practice with something that you're 100% willing to lose. Even when you're trading with capital that you're risking. So you have to be willing to lose it. But when you're practicing, you're literally like just practicing, right? So it has to be with the smallest increment possible. So anyways, if I want to buy something like this, I place my order and then my order is going to go here. And you see now the quantity went from 24 million or it was increased by the amount that I sent, which is 100,000 coins. Now I'm waiting here in line. I have to wait until all these people in front of me get filled. And then, there's going to be people behind me by that time. And when I get filled, I'm going to send an order and I'm going to sell it at that time, right? Now, is this the only way of trading it? No, there's a few ways for you to trade this. And sorry about that. Let me take my sound off. Yeah, there's a few ways to trade them. Some people do it like this. So it's a simple one entry and one exit. So when I get filled at 14 Satoshis, I'm going to send my order at 15 Satoshis to try and sell. And I'll wait there patiently. Now, what happens if I'm not getting filled at 15 Satoshis and the price is about to drop? I see that the quantity of buyers here starts decreasing. Maybe at that time it's 20 million and then it decreases. It goes to 18 million, 17 million, 16, 14, 12, 10, 9, 4, 5, 4. So then at that time, I know it's going to drop down. So what I'll do is, my position that I have that I bought it at 14, I'll just sell it back at 14. I'll flat trade it, right? That is how you do market making. You buy and you try to make one increment, one of the smallest increments, or flat trade it. We often call this strategy 0+ because you either make zero profit or, whatever profits you can make. Now, it's not always going to be the case because sometimes the bid is going to drop right away and you're not going to have time to flat trade it. So then the bid becomes 13 and the ask becomes 14. So what you do at that time is you cancel your sell order that was at 15 and you try to sell it again at 14. So if some buyers come and buy at 14, well, then you would have sold at the same price you bought at, and again, it would be a flat trade. Now, when can you lose? Well, you can lose when it doesn't only drop 14, but then it starts trading at 13, and then you see that 13 is gonna go away, then you have to sell it at 13, and then you had a 1 Satoshi loss. So you can either win one, flat trade it, or lose one. Now, if you don't take your losses, then it's just gonna keep going down and you might just lose way more. So you have to be good at taking losses and you have to be really good at flat trading it. If the trade doesn't go good, flat trade it. Most people that don't succeed in this, they don't want to flat trade it. They're like, no, I feel it's gonna go up. Don't think about your feelings. It's a game. When I got hired at the first firm that I talked about, World Trade Securities, one of the reasons I got hired is because I told them I play video games aggressively, and I was ranked super high on some video games that I was playing at the time. So I told them about that, and they hired me because of that. They told me that, people who are good at market making are usually really good at games, and that's what they wanted, because they wanted somebody who thinks quickly and is able to click quickly. Doesn't really second guess himself, start thinking about it. He's quick. And people who are really good at video games, the games that I was playing, they're good at that. They make decisions quickly and they click quickly, right? They had a high APM, which is one of the things I told them I had, which is a high action per minute click in these games that I was playing. So they like that, and that's why they hired me. So you have to be good at being quick, okay? Not being like, and that's in trading in general, in any strategy, but this more because it goes fast. Now you can do it in other ways. I suggest to start doing it in this way, one entry, one exit. But, I've had traders who did it in a bunch of different ways. Some traders would layer their entries. So they would put maybe, a part of their entry here. And then here, they would put another part. Maybe here they put 100,000 coins. Here they would put 200,000 coins, right? So if it drops more, they would even buy a bit more at this price. And then if it drops more, they would even buy a bit more at this price, right? So they would layer, and they would do it in a pyramid type of way. So first entry would be, let's say 20, a percentage of your of the amount that you want to trade for this coin. And then the second level would be a bigger percentage, and the third level would be an even bigger percentage. Now, this is good in a way because if you buy at 14, you try to sell at 15. But if it drops again, you're adding to your position at 13, a bigger amount. So then you try to sell, whatever you bought at 14, you're trying to flat trade it at 14. And whenever you bought at 13, you're trying to sell it at 14 for a profit. So you still end up making money. And if it drops again at 12, you're buying so much more that yes, if you're selling at 13, you are losing money on what you bought at 14. You are flat trading what you bought at 13, and what you bought at 12, you're making money on it. But what you bought at 12 is so much bigger that you end up making money. So there are different ways of doing it, okay? And you can test the different ways, always with the smallest increment possible. But yeah, these are the ways that you will be able to trade the strategy. So test it out if you want. And yeah, I'll see you guys in the next lecture.